Analyzing a trend is very easy when you imply or implement the T-line. Note after a strong downtrend in the market and moving that far away from the T-line, we know there's a very simple truism. The further away you move from the T-line, the higher the probability it's going to come back up and test it. Note that we had some good trading here. However, today's trading, opening lower and closing below the T-line, makes for the prospect of identifying a bearish J-hook pattern, meaning this downtrend right here could be the same magnitude as this downtrend here. On the other hand, we don't have enough information yet. If we see a couple of doji days or bullish trading days that might be curling back up, we might have a bullish J-hook pattern that may take us back up to the 50-day moving average. What do we do in between time? If you can't tell what's actually happening until you have more information as far as investor sentiment, sit for a couple of days. You're much better off sitting and maintaining your cash position so that you're prepared once you see which direction or which pattern is being established. Analyzing gold, we can see it's got a nice big fry pan bottom and it's continuing to move up. And as long as you're in a fry pan bottom type pattern, there's one very simple strategy. You stay long as you don't see a sell signal and a close back below the T-line. What do you do with this information if you're not trading gold? Well, it's pretty much implying that the gold sector stocks are probably acting well. As you can see, Nugget, NGUT, the 3 leveraged gold miners in ETF, still trading positive, kind of a J-hook pattern. Our recommendation on KL is very simple. You can see a wave 1, a wave 2 going into wave 3, and it has a very simple trading strategy. You just stay long until you see a sell signal and a close below the T-line. If you're trading and you've got a few positions on and you don't know which way the market is going, having a few positions in a strong sector while the market's kind of flopping around, such as gold, at least puts you in a situation where you're still making a profit while you're waiting for more information to come out of the overall markets. The extensive downtrend in crude oil can now be seen as seeing a little bit of bullish activity here. Stochastics coming up. Doesn't necessarily mean it's going to be in a strong uptrend, but what it does mean is if they start basing crude oil prices in here, a lot of crude oil stocks are now going to get some strength after selling off very hard, giving you the opportunity to buy some positions as soon as you see a bullish signal in a stock or oil stock that has been hit pretty hard over the last 3 months. There's going to be a lot of money made in the markets this year just by simply using candlestick analysis. We don't know whether that money is going to be made on the long side or the short side or both, but there's a very simple rule that the Japanese rice traders utilize. Let the market tell you what the market is doing. That'll be it. We'll see you in the chat rooms.